the psychology in trading, it is mechanics plus discipline. Mechanics plus discipline. That is what psychology is. So psychology of trading is, the goal for psychology is for you to increase your profit performance, to be more profitable days and days, month and month. And in another way, if somebody who is skillful is simply somebody who is mechanically great and very disciplined, right? That is what leads to profitability. That's the definition of a very skillful trader. So psychology has two elements, the mechanical part and the discipline part. The mechanical part, it is 85%. It is 85% of the psychology. It means, what does it mean? It means that if this one is psychology, right? If this one is psycho, you divide like this, and then you have 85%. The mechanics, you need to master the mechanics very well. And then 15% will be for your discipline. You will discipline on applying the mechanics. But those who don't master, how can you be applying those mechanics if you don't master it? That's outside, inside the psychology. That's how it works. Psychology has a lot of mechanics inside. You just need to be disciplined now. So the mechanical part is the A+ setup trading plan. Let us talk first of all about the mechanical part. The mechanical part is the A+ setup trading plan. The A+ setup trading plan, the mechanic in there is only the golden cross. I told you it is when Kijun cross above SSB like this for the buy. And the second part of the mechanic is the A+ setup. You just take all of the A+ setup, considering also the number of touches. So it's just something like this. Let me show you a mechanic. For example, let me take a cross here. The first time part of the mechanic is that SSB must cross, SSA must cross, Kijun must cross SSB to the upside. This is the cross now. The green line is Kijun, cross above. And then from this level on the right side of this cross, you then look for a setup. This is one Tenkan setup that you can buy. This is one Kijun setup that you can buy. This one Tenkan setup that you can buy. All of them. That is that's the mechanics. You need to be very good at it. Very good at taking those. You can be buying them. That's the mechanics. That's all. That's all. You don't have much than this for mechanics. Yes, I gave you all of the way to read the standards, but if you enter early like this, you have to make yourself so much money. All right. This is the mechanics. Only this cross first. That's number one. And number two, this number two. This is mechanics. This box now, this is mechanics. I didn't add anything. That's it. So now after that comes the discipline. Discipline is just the fact that it's not the way you think. It's rather you enter in with in lower time frame, 1 minute, like Gyosho Zada said, with the rule of Gyosho Zada, or you enter based on the setup in 5 minutes. That's it that you need to do. You go on lower time frame and then you start looking for Gyosho Zada. Like inside this box, right? If I can go do it in 15 minutes. And if I do the way you think is that you need to think about respecting the mechanics. Let us look at this, for example. Let us say that you had in 15 minutes, you have this Kijun going above SSB. This is the first part. And then you have this setup, SSA setup here. You then go in 1 minute. You pick the type of entry that you want to use at this point. You have two type of entry, right? You need to be disciplined to enter in the setup, not to enter anywhere. That's why I'm going to the part where the setup is. That's a discipline. You discipline on your mechanic. You are not disciplined out of thin air. You need to be disciplined in the mechanics, not out of thin air. Like this. Even in difficult market I gave you, it is at this inside this box that you look at. Rather, shows that you prefer to enter here when shows that I said ticket cross first, and then the candle above, the Shiku above the candle, then Kijun above the cross, then the cloud separated, and then the candle out. Then you can be buying at this point. And when you buy then at this point, that's at when you buy at this point, right? That's when you know that you are buying inside the mechanic, right? Okay. And you can also buy the A plus setup directly inside the box like this, or anywhere inside this purple box. You can be buying anywhere inside. This is another way to enter. That's the way you think. You need to think in mechanics. You discipline the way you think in mechanical way, not waiting when the candle are already up here that you go and buy. You say, oh, you went up already a lot there, then you buy here. Why? What prevents you to buy inside this place? That's what we call mechanically discipline. Mechanically discipline. And then you have the reason to hold the position if SSA is still crossing or Tenkan is still crossing separated. So what all of that does, when you are disciplined, you have some sort of emotions that positive emotion that you produce. Confidence. This one is confidence, not trust. You have confidence. You have what is the confidence? The confidence is the fact that you can do it. You can do it, right? And you have the assurance in your mechanics. That is what gives you confidence. When you have the assurance in terms of the way you read the chart, the way you think that you can only enter inside the setup. It gives you confidence. And the other emotion that it will give you, this one was patience, but I changed it into wisdom. The right timing of the test setup. Wisdom is that you enter at the right timing. You saw that in 15 minutes, this place was the right timing, right? This place, where is the 15-minute bar? There's a bar there where I place the 15-minute vertical bar. That's the right timing. So let me read you all of the emotion when you are disciplined that you can have, right? Because even professional footballer, no matter how good you are mechanically great, if you are not disciplined, you don't respect your lines, your dribbles, your lanes, you will not have this emotion. But you can have this emotion if you are very disciplined. Look at this. The first emotion for the confidence, when you are confident, you are optimistic. A positive and hopeful outlook of the future market opportunity. You know that since you are inside you are in a great timing and you are in a great setup, you know how the trade will go. And then you have assurance, a strong belief in one's ability, strategy leading to decisive action. You believe because you are mechanically good, right? That confidence comes from mechanical greatness. You will not be selling here, for example. Okay, you will not be selling here like this, at this point, like this. You will not be doing those type of bullshit type of, you put the stop loss above the eye. You will not be selling this type of thing. You will not be doing that. This is nonsense, right? Because you are mechanically great. If you were doing that in the past, you will not do that, because those people who use other blocks, supply and demand, they will say, okay, it touches the supply, then I sell here, and then I leave the position. I have a risk reward of, let's say, 3. I have a risk reward of 3. When it touches 3, and then they get wax each time, because they are not mechanically great. You have the assurance in your mechanic. It's the assurance in your mechanic that gives confidence. And then satisfaction, a sense of accomplishment from successful trade, including confidence and motivation. Look, for example, the right timing is here. The setup, one setup is this setup, another setup is this one, another setup is this one. Those are Kijun setup and SSA setup. You enter here, then you enter at this level, then you enter again at this point. Let us say, for example, that you have entered like this. You are placing your position. You are placing your position, each position, like you hold, and you hold. You hold because holding is also a mechanic. That's the way you think. You know that you need to hold till Kijun and Tenkan get close to cross back. You hold. You'll be making 11, 10, 17. That's roughly 40 times the money that you make. Yes. When you run positive ad, how many times the ad got the return on investment, the return on ad spend of 40? You need to have a great type of ad strategy in terms of copywriting, marketing, and offer. All right. That's the same thing here. You need to have a great mechanical reading. And it looks so simple now. Right. And then motivation, the desire to continue improving one's skill, strategy, fueled by past success. Because if you have succeeded, your last 3 trades like this, or your last 6 trades are successful like that, you will be so motivated. That enter inside of, I can do it. Of course you can. That's what gives you confidence. The mechanical part. Resilience, the ability to bounce back from step back, maintain confidence in the face of challenge. Let us say, for example, you were about to sell, to buy here. You bought here, right? Because it's actually a Tenkan setup, but you hold the position. You place the stop. I mean, in 1 minute, you place the stop loss at this point. You thought that, okay, you can leave it go. You hold the position too long, right? And then you got exit here. You are resilient just because you know that it's not the end. You have another setup that's just ready right now that you should buy. Oh, how did I do that? That you buy like this. And then you buy this resilience. Step backs. You just maintain a position, and your stop loss will too near, too close. You know that in trading you should not increase the stop loss like this. You should only reduce it to 0. You should not increase. If your stop loss is at this level, even if the market go down, you should never put it down like this, because you are risking more than you plan. If you are risking your 5% of your trade here, when you increase that is already 10%, and you do not, when you enter the position, you do not plan it. So if you were risking 5% and the candle are going down, just reduce the risk to 3%, you'll be more profitable. And then 6, you have contentment, a sense of peace and acceptance regarding one's trading journey and decision. For those who lost profit, capital, burn their account, blow up, like me, at my beginning, I blew up the account, I burned the profit account. For me, I have peace and acceptance. I accepted that state. That made me analyze the chart better. That made me push up toward my journey. My decision of blowing the account that I did not even know if it was a decision or a choice or whatever. I accept it now. I have peace with myself because I've analyzed. I'm now ready for profit, right? Excitement. That's what we call confidence. When you are at peace with your own trading journey. There are people who hate when they lost trading like that now. They still hate trading. They are not. They did not make peace with trading. There are some of traders, maybe some of your brothers, sisters who try trading. You will see they are mad as F. A thrill, excitement is a thrill in the face of new opportunity and the market is dynamic, increasing engagement and enthusiasm. What is a thrill? What is that thrill here? Imagine you are in 15 minutes like this. When you will see Kijun going below SSB at this point, are you excited to see this movement? Kijun going below SSB. That's a new downtrend that is planning just for you to eat money as a living. You place your stock, your setup here, and then you start selling. Selling. Make profit. Pips. Right? 8 times your money. That's the excitement that you have. There's an opportunity, that's a new opportunity, right? And then you have the courage. Confidence be great mechanically give you courage. That's the confidence part. Because you have the willingness to take calculated risk based on strong conviction in one strategy. This is a calculated risk, right? Trading is not about not risking or risking too small. That's why I said that I don't like conversation about risking 1%, risking 2%. No, I don't like those conversations. I like conversation about calculated risk. The first risk is the setup risk. The last risk is the financial risk. Even in real life, you need to choose the type of business where you put your money in. You cannot be supporting a family member that has a broken business that will run with the money. Because the money is not the problem. It is the company that is the problem. So in trading, it's not the risk that the percentage per trade that is the problem. It is the setup that is the risk problem. The number one risk that I'm looking at is the setup risk, not the percentage per trade risk. So that's why when you have this mindset of looking at the setup risks, if you come and sell here, for example, there is no setup at this level. You see the risk that you are taking. So you better sell instead at this level, or sell it at this point, or sell at this point. Right? Don't come and sell at this level. You are taking too much risk, like brain dead risk. So courage comes from calculated risk. Courage comes from calculated risk. Courage comes from calculated risk in terms of setups, not in terms of money percentage per trade. Even with 1%, you also burn your account. There are people who took many trades of 1% who blow their account. Because the trade risk is not the conversation. It's not the conversation about risk that we need to have. We need to have a conversation about A plus setup risk calculation. So empowerment, a sense of control over one's trading decision, fostering a proactive approach of the market. Yes, you control your A plus setup. Clarity, a clear understanding of one's goals and strategy leads into confident and focused decision making. A clear what? A clear understanding of the A plus setups. A clear understanding of this. Okay, I hope you get. That leads to focused decision, confident focused decision. In summary, this positive emotion contribute to a confident trader's ability to navigate the market effectively while maintaining a disciplined approach. Okay. In the wisdom part, the positive emotion when you have wisdom. Here is the revised list of the positive emotion related to wisdom that a trader can experience. A calm state or calm. You know, a sense of tranquility that help maintain focus during market fluctuation. Look, for example, in Bitcoin. Let us go in the crypto money, the cryptocurrency model. You know what? A good trader A mechanically great trader knows that if he bought Bitcoin at this point during inside the inside in lower time frame, right? At this point, let us say that because this weekly has a setup in 1 hour something somewhere. This is a weekly chart. So you bought Bitcoin and then you have market fluctuation like this. The market go up, then go down, go up, they go down, go up, they go down, go up, go down. The trader will not panic. The trader will not panic. Look, he knows that, right? He's protected by SSA. SSA. He knows that it's not the time to add up position. He doesn't. He's tranquil. He's no more. Normally, even in Bitcoin, when we invest, normally when you don't trade Bitcoin, you just invest inside. You don't panic. It's just you, you don't put stop loss. But let's say, for example, you put stop loss. You will not panic because SSA is the response that is waiting. This SSA. He knows that it's even the right time when the candle arrive at the point of SSA again and buy again. Because he's calm, he knows his mechanics. He knows that even though when the halving started at this point in April, where was this April? April somewhere in 2024. He knows that no matter this market fluctuation, right, he's not panicking because he understands the mechanics of how Shimoku works, right? He's calm. Contentment is satisfaction with the current state of trading, allowing for thoughtful decision making. You know, he knows how he trade now. When he is mechanically good, he knows how he trade. That's what gives him confidence because he doesn't trade depend on him. It's depending on what he sees in the market. Confidence is one ability to wait for good opportunity without rushing. Let's say in Bitcoin. In Bitcoin, the greatest opportunity here in Bitcoin was this setup SSA, right? That's a great opportunity if you could have bought here. But if you didn't, a trader will wait for this other one. Tenkan is not yet touched here, right? You will wait Tenkan to be touched somewhere at this level. And from that, that's what he has. He has confidence in what ability to wait for a good opportunity. He doesn't wait out of thin air. He knows his setup. When you are at this level, you know, when you are confident, you know this, that you have this confidence to wait. And then resilience. He has the strength to withstand market volatility, reinforcing a long-term perspective. You know, this one was market volatility in Bitcoin, right? When the halving started, people were not trusting Bitcoin, were saying what? You guys said that the market will go on halving. Halving is the only, make the market only goes to the upside. Halving make the market only goes to the upside. Till this is wave 1, wave 2, wave 3, wave 4. 4 waves to the downside already. You guys really still think that halving will put the market to the upside? That was the question of those who are skeptical, doubtful, or want to start making some problematic negative comment about Bitcoin, right? But a confident trader knows what is looking inside the market. When you will see SSA being touched like this, oh my God, he will put all his money there, buying Bitcoin as well. So wisdom. So during resilience, right, market volatility doesn't impact him that much. He knows how the market works. Wisdom, understanding that good trading often requires time, leading to more informed decision. Well, this one means that, right, you need to know how trading works. You may be losing at the beginning, but when you understand very well how it works, you have informed decision. Informed decision is mechanical decision. Informed decision is mechanical decision. Mechanical decision. That's what we call informed decision. Another information that I want to give you is that you need to trade during market hours, opening market hours. Let me tell you, for scalper mostly, look at this. There is the two biggest market. There's the London market, right? The London stock market stock exchange, who opens at 9 a.m. This is when you must be at 1 a.m. to trade, because there has high volatility there, because you are looking for high volume. That's high volume, right? And the New York Stock Exchange market at 2 p.m. That's for Cameroonian hours, 2 p.m. Right? So when you have those two, then look at this. If you come here in this, the website that I gave you. If you come on this website msim.com, forex and world market hours, what do you see when you select Lagos? This is the Cameroonian time, or Central Africa. The market open at 9. Oh, what did I put? Put me the right time, my brother. What happened? Why are you putting 12 p.m.? 12 p.m. Why are you putting that? Lagos now. Yeah. Put West African. Let me put West African. Okay. Okay. I choose West African now. West Africa. Yes. So London market open at 9 a.m. New York opens at, you see, opens, open, close. You can see the legend for market that are open, but this, it goes from right to left. You see 1, 2, 3, 9, 10, 20, right? From the right to the left. That's how you read it. 9 a.m. opening of the London market, and 14 and 2 p.m. opening of the New York market. And one of the high volume. When the market opens, is high volume. It's like people are arriving to work. Their work is to do what? Their work is to make trading transaction, right? Make you know that it's not because you are working digitally. Trading is also a type of job or employment for people who work in central banks, right? Or in Fed. You think that the Fed president, right, Paul, when he goes to work, you think that he doesn't have an hour when he arrives he arrives at work. They have hours, right? Like 7 a.m. or 9 a.m., right? To arrive at work. For the Central European Central Bank, ECB, those employees arrive at a certain point, right? It is those employees that make this market move, right? When they read data, the market will move, right? So you need to align yourself with market opening. It's not because you are a trader that you think that you can trade in any hour. You need to understand that high volume happen during London and New York market opening. And New York market opening is correct, is overlapped with London market opening. When you see this data, this is the code at 9 a.m. London open, then they take a break, maybe of 2 hours. Then at 2 p.m., they come back to London guys, come back to work for the stock exchange. And then at that time, it is at 2 p.m. that New York's open. You can change the hours here to take your country hour, and then you look at it. So the highest volume in trading is during those opening. That's why the market take one direction. The risk that you have is that you go and trade in Sydney, for example, between 10 p.m. and 6 a.m. Most of the time, the market doesn't move that long, and during this stock exchange market. This stock company is not, I don't know how, this stock exchange company is not the biggest one. The two biggest one are those two above. And then the third one is Tokyo. Sometimes Tokyo make longs move too. Sometimes Tokyo mostly during long, like during interest rate, during like big economic news that are I gave you. So trade also during market opening. Don't make as if because trading is an online type of, because it's online. Trading is not social media when you can make sales at any hours of the day. Even for those sales, they are depending on the type of money that you your price is. They may want to buy only at the end of the month or only when they are out at work, only when they are at break or during weekends, right? Yeah, there's a time where the client has more opportunity to go out of work to make the purchase for your maybe your $1,000 course. Maybe only the weekend. They will say that with the weekend when I will be free because he cannot go out now to charge his bank card to go and pay you or to send your money somewhere in any shape of form or to take money somewhere if they don't have money in the bank. So trading is the same thing. Trading work with volume, specific volume during specific time. During specific time, right? That's the same thing. So 9 a.m., 2 p.m. Don't forget that trading hours at market opening. You need to trade market opening. When you trade market opening, you will have more opportunity to do direction. That's wisdom. That's what we call informed decision. This is an information that I did not tell you yet, but I tell you now. That's an informed decision. Many people don't know. Many beginner, many amateur. Okay. Then we have anticipation, a positive expectation that good results are to come through patience. And patience here is not about waiting without knowing what you are waiting. Like waiting out of being patient. Yeah, I don't like the word patience because it's used in the wrong way. Patience is mechanical patience that you are waiting Bitcoin to hit, to touch, Tenkan again here, to go and look for a buy opportunity in lower time frame confirmation. That's patience. But there are people who say patience and just be patient. Trading work. Trading work with patience. Trading work doesn't work with patience. Trading work with mechanics. Stop using the word patience. Mechanics. It's not even patience. Through mechanics. Let me even change it. ChatGPT. That's the question of that. Come through mechanics. Anticipation. You anticipate mechanics. Let me remove that person. I don't like that. ChatGPT is not better than humans. Discipline, a strong commitment to follow, a strong commitment to following a trading plan, reinforcing a structured approach. Discipline is what? The art of following a trading plan. So discipline is just following mechanics because this is a trading plan. I gave you a trading plan previously, but basically this only those two are enough for the trading plan. What I gave you are all of the information, even during difficult market, that if you struggle in trading, you can use all of those techniques. But basically, right, if you only have this part, those two, the golden timing and the April setup, you are gone. You are gone. For sure. For sure. Straight to the point. What else? Anticipation. Okay. Discipline. Clarity. So wisdom is about clarity to a clear perspective on market trend and personal goal, facilitating patience and decision making. See, the clarity, right, about the market trend. Let us say the mechanics give you mechanics give you clarity. Mechanics give you clarity. That's the only thing that will give you clarity. Mechanically brain. Use the A+ setup plan. Satisfaction, a sense of accomplishment when waiting for the right moment pays off. Waiting for the right moment pays off. The next time to invest in Bitcoin here is also again, waiting for this moment. Another in Bitcoin, you can also do DCA, right? Dollar cost averaging. When you invest each time at each period, every 1 week you can invest 500 right? 300,000 francs CFA every 1 week, so that you invest year. And even when the markets go down like this, your overall position, the middle of this position will be somewhere down here. So you will not be in negative money. You will be inside in positive, because your overall center of your position is somewhere behind this. But we are talking about trading, not about that type of fulfillment. A deep sense of purpose and achievement that comes from sticking to patience, to a patient strategy. Let me remove this word patient. Sticking to mechanical trading strategy. Let me put mechanical. Yes, apply patience. Because there are some people say, wait what? When you ask those people who like the word patient, when you ask them, wait what? They cannot answer. Wait, when you say wait what? What are you waiting? What? They start looking at the chart. What are you waiting here in the middle of thin air? Oh, when you are mechanically, you know that this is where you buy. Mechanics, patience. So in summary, the positive emotion reinforce a trader ability to remain patient. Let us say you remain mechanical. Ultimately contribute to better trading results. That's why I say I told you that profitability comes with mechanics and discipline. You need to discipline to apply mechanics at the right time. And more disciplined approach. All of these two emotions, right? When you have those two bigger emotions of a confident trader, you can then have prediction. You can predict the market with confidence. That's what people struggle a lot. A lot of traders struggle with prediction. In one eye look, you can predict. It will be so simple. There are people who do their analysis, right? When they do their analysis, it takes 30 minutes. Hi, my man. I say, Mola, Kombi, you are making too much time to analyze only one pair like this. Too much time. Meanwhile, there are others, right, who take 1 minute or 30 seconds to analyze. Like he just do this. A line here and a setup here and go and buy. It's finished. That's less than 10 seconds per asset. This one for Bitcoin. And then I will do the same thing for USD, GPOI, for USDT. Normally, when you are already good, you should not make more than 15 minutes for more than 15 minutes in one analysis of one pair when you are getting ready to take a position. 15 minutes is even a lot. Imagine you have 3 pairs to trade. It's already 45 minutes. It's even not. If you do even 5 minutes maximum, that's good. So now that's for disciplined trader. See the type of emotion when you are disciplined that you have. You have what? Calm. You have what? Assurance. You have what? Confidence. You have what? Motivation. You have what? Wisdom. You have what again? Anticipation. You have discipline. You have excitement. You have courage. You have satisfaction. You have clarity. You have fulfillment. And those all of the emotions that when you are already good, you want to have. Those are the good emotions that you can do it. When you have those emotions, you know that you can do it. You know. It's not about, it's like you know what you know. That's when you become skillful. But pay attention about this one that I'm about to tell you. There are people who still experience negative emotion. Why? Because they have bad mechanics. They have so bad mechanics that they live trading with negative emotion days and nights. Days and nights. For example, bad mechanics is that right? For them, they don't care about mechanics. They wake up in the morning. they start putting position. Like they wake up in the morning, they won't brush their teeth. They brush nothing. They don't prepare. They don't do analysis. They don't do mechanical analysis before entering a trade. And then they start losing, and then they experience this type of emotion. Let me show you. See, for example, if you are driving a car in a highway and you are running so fast that one of your wheels get off of your car, can you still keep running? No, right? Because mechanically the car is already broken, right? Same thing for the bicycle. You are driving the bicycle. Is it driving the bicycle? You are riding the bicycle without one wheel, or the front wheel just broke. Mechanically, you are no more good, right? That's when this emotion of fear and greed, of fear, will start appearing while riding this bike. And another type of mechanic that is very wrong is that you try to build an A plus 50 type of building, an Empire State building in a bush tree house that has a banana roof. Like, this is a pygmy. How do they call pygmy in English? It didn't translate. Pygmy, like a house for pygmy, right? Pygmy house, and then you want to build an Empire State building, and you want to build an Empire State building at this level, right? Right. Easily trying to build an Empire State building on a pygmy house. That's surprising, right? That is surprising. And that's how those people who are wrong mechanically, they start having this type of emotion of fear and greed, right? Those are the negative emotion that govern them inside them, and they don't know why it's happening. When you are when you are bad mechanically, right? When you have bad mechanics, you start having emotion. It's not about you, it's about the mechanics. You don't even understand that the mechanics are not, your mechanics are not actually great enough for you to experience confidence, right? So how can you be driving a car without of three wheels in a highway at high speed, and wanting to experience confidence? How will you do that? If you are driving from Yaoundé to Douala, how will you be able to reach Douala? How? Even for bicycle, you are going down, you are descending a mountain with high speed, and then the front wheel just get broken. How will you be able to have confidence at that level, at that time, when your mechanics are very wrong, are very broken, are just broken? How can you be having an Hilton hotel on top of a pygmy house, and then you say that you try to build a big hotel on top of this pygmy house? How is it possible? And then you are looking for confidence. This is where you are looking for confidence. That's why I said that psychology is 85% mechanical. When you fix your mechanical, the rest is discipline about those mechanical. You cannot be wanting confidence with wrong mechanics. You cannot be having confidence with wrong mechanics. Don't even expect that. You will not have that. You will not have that. So let us look at emotions that affect the traders, those type of traders who are wrong mechanically, who don't want to be great at mechanics. They have two types of emotion: fear and greed. See this greed person. So let us start with fear. Fear, the first on the list is nervousness. Here is a ranked list of fear-related emotions that traders may experience from least to most severe emotions. The first emotion is nervousness. Mid anxiety about market movement, often manageable and can lead to reckless trading, right? And then apprehension, a strong feeling of unease about entering or holding a position which can lead to hesitation, right? So when somebody has apprehension, he start hesitating like this when he's not right mechanically. For example, those who don't know that at this level is a setup to buy. At this level, you know what they will do? They will say that, right, oh, see this doji, see this doji, this is a doji candle, right? It means that the market is about to reverse down. This is an order block. Is there an order block somewhere here? Yes, let me check if there is an order block. Let me remove this. Let me look at, okay, this is an order block, right? They will start saying, oh, fat doji, fat doji, let me sell. But wait, I just sold. Huh? Why is it that I see another doji on the other way? Is there an order block here? Yes, it's an order block. So let me buy. What's happening? I don't know. Should I buy? Should I buy? Should I buy? I don't know. Okay, let me start comparing dojis. This doji was longer than this one. So the the doji, the red doji is longer than the green doji. So you see this hesitation. Where are you going, my boy? Where are you going? Buy or sell? Oh my God. That's why you need to put your Ishimoku assistant. This is a buy, a clear buy, a clear freaking buy. A clear freaking buy. There's nothing that forces you to sell right now. The only thing that will make you sell is the timing. This timing, Kijun going above SSB, right? Make us buy. But if Kijun doesn't come back below SSB like this at this level, we don't sell. So because you are wrong mechanically, you start asking yourself about dojis and all. Come on, boy. Worrying, persistent concern about potential losses or market volatility, which can distract from worrying, persistent concern about potential losses or market volatility, which can distract from making clear decisions. When somebody worry about Bitcoin, for example, should I buy or should I sell? Let me look at this. You start seeing all of these two waves. Man, this second wave, because we made a double top lower high. This is a seller. This is the neckline. We broke the neckline. Let me sell on the neckline. No, I should not sell. Let me wait the reset above here before selling. But wait, the problem is that when I arrived at the retest, when I tested again the top of the second high, that's how they have conversation. And then he made this high doji. This doji has a long wick to the down like this, showing that the market want to go up. So if I sell here, maybe it will not work. Oh. Man, I'm worried about what should I do. That's what happened about those traders because they are not great mechanically. The doubt, questioning one's strategy ability or leading to doubt and indecision, leading to doubt and decision. So that's the same thing. You doubt, you worry, panic, sudden intense fear that can lead to irrational decisions such as rushing to sell position during market declines. A sudden intense fear that can lead to irrational decision. Look, those who are panicking, look at this. There are people who are invested in Bitcoin at this level, like lower time frame. I don't know. See, when the Bitcoin arrived here, he made a doji, right? As I called precedently some candle doji, those are hammers, right? Those are hammers. This is a hammer, this is a hammer. It's not a doji. Sorry, these are hammers. Doji are mostly like this one, or the dragon doji like this one. This is a hammer, by the way. This is no. So those are hammers, sorry. I didn't trade candles since. I will not even trade candle. We don't trade candle, we trade volume. So our on panics. Let us say you bought Bitcoin at this level and you see first push to the downside, testing your entry. Second push, testing your stop loss. Why don't you cry? Why you cry? How do they draw again? They cry. Somebody will cry like this. When you start crying at this level, at this level, when this week we arrive near to your stop loss, you will start crying, right? Panicking, fearing, and then at that point you will start withdrawing money, and then you see Bitcoin rise again. What did that do? What did that do? This is panic, paranoia, an overwhelming fear of losing money, leading to extreme caution or avoidance of trading altogether. An overwhelming fear of losing money, leading to extreme caution and avoiding of trading together. Like there are people who decided that trading and them is finished, never again. Why? They lost money maybe in this first wave. Then they lost money again this first wave, this second wave. That blew up their capital. And they said that trading is for people who gamble. What, my boy? My boy, trading is for people who are mechanically good. And then they decided they hate trading now. They hate the word trading and they hate any stuff about trading, forex, crypto, stocks, indices. That's why their psychology themselves block them in a part of the market where there are people who hate the industry. That's indeed by paranoias. Because there are people who, when I invested Bitcoin when was at this point, right, at 73,000 when he broke the 69 previous level, right, 1,000 level. And they have probably heard on the newspaper or from a family member that Bitcoin is going to the upside, to the moon. Invest. When they invested maybe 10 million, that 10 million turned into 2 million a year. And then they said, all right, plus jamais, never again. Trading, all of this bullshit, never again. And then they stop trading forever together. They lose money and they stop trading. It's done. They are done with trading. Meanwhile, when at that they are 2 million, they should have increased more money, right? They should have increased more money and waiting for the next 2 million again to increase again more and more, because there were no reason why Bitcoin will go down. Looking at Ishimoku mechanics, no reason. This one was just a correction. No reason. They should have increased more millions inside this market. I don't know how I will start telling you all of this. I'm so tired. Hopelessness, a state of helplessness after significant losses, which can prompt reckless trading behavior in an attempt to recoup losses. So those people, there are people, right, when they lose money here, they want to recover fast. Recovery. They want to recover fast. They will lose money here. And then let us say that they had 1 million. They invested at this point. And then they lost 500,000 francs CFA on this first trade, right? They lost here. And then they said that, okay, it's not bad. I'll wait some minutes and then I will trade again. Then they trade again, they invest here, and then they lose again in the next 500,000 francs CFA. They lose now 1 million. When they lose that 1 million, right? When they lost the first 500K, they wanted to recover that 500K. That's why they enter another position that has no setup, because they are not mechanically great. and that lead them to hopelessness, significant loss, and then they have reckless trading behavior. Reckless is like there are even some people that right, he enter without knowing the right lot size. So he entered just a position like 2 lot. Man, depending on our capital, 2 lot can be too big. I told you that there are three type of lot bags. 2 lot is at this highest level. Man, you put 2 lots, it's a lot of money, man. It can be a lot of money for what you just put. So managing this emotion of fear is very crucial to making a disciplined trading approach and making rational decision in the market. The next emotion is greed. Those are people now, when they make some money in trading, they start bragging about it. They start being impolite. My money. Those are people who like to say, I want my money, my money, my money. They beat their chest, my money, my money, this is my money, this is my money. They make their mouth like this. For example, those who invested at this level, let us look at in 2000 and which year was it? 2021. They invested here after the period of health crisis, right? And then they made this money, right? Let us say even they invested here, they made this money. Arrive here, let me put a tight support. Let us say they went on lower time frame. Let us say they invested 10 million at this level. 10 million. Their stop loss is 10 million, right? And then the money turned into 20 million already. 19 times their 20 times their money, 20 million. You know that, you know what? Arrive at this point now, they smile like this. They have like that sort of Dracula of the Joker type of smile, a dark smile that has a lot of ego inside. Those people now, cash, they are eating cash and they are very impolite in the street. When they walk now, they walk, don't touch me. They don't walk with dirty people anymore. They start classifying people like those. They now talk about other people who they don't care really much. Meanwhile, they were begging. They were begging when they had just 1 million. That was even a borrowing something. Now they can look their lenders like this. Those people like to those people. They call people those people. You know those people, those people. When I say those people, the first those people that I'm saying is that not those great people. Call other people those people. They call other people those people. And they like this sentence. My money, my money, my money. Those greedy people. My money, I want my money. They like this mind, this possessive adjective. Mine, 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 mine. I need that. Anyway, I need that my money. I want my money. Here is the ranked list of greed related emotion that trader may experience from least to more severe. Enthusiasm, a positive excitement about potential profit, which can motivate trader to pursue opportunity. Let us say, for example, at this point, right? Let us say, for example, at this point, he just invested, right? And then his money just turned into 9 million, 10 million at this point. He invested 1 million. And he has a potential for it to come to this point that will be worth it 20 rather than making 10. You have 20. So you have these great people will have like a lot of enthusiasm, right? But they are wrong mechanic, but they don't know very well the mechanic. I will tell you where the mechanic, the bad mechanic is situated with those people. The desire for more, a strong desire for additional gains that can lead to increased risk without taking significant precaution. Voila. Now, when the money becomes 20 million at this point, when they have their 20 million a year for their first trade, they don't say that, right, let me go and borrow more money. If we broke this last level at this point, this week, it means that the market can go to the moon higher than that. When again, those people borrowed again money, although they use people jangy money. They put here again 5 million now. 5 million for this 5 million on this second position. They desire more money. If I had 20, if I got the ability to have 20 million, what prevent me to have 50 million, something like that? To have more. Impulsiveness, a tendency to make, oh no, desire for more, increase risk taking without significant precaution. So then, what happened with those people, those greedy people? Is that right? They are so raw mechanically that they come and buy here without any setup. And then the second position get waxed by this candle. And then they lose that position. When they lose that position now, right? They don't understand it. They said, okay, anyway, I lost 5 million, right? If I lost 5 million at this, I still have 15 million inside my bank, my broker account. So I can just withdraw it and give back other people money. What happened is just that what happened is just that when the price arrived here, you have now 50 million and he's still having hope. He says that, okay, this one was a support and I see a hammer at the support. It means that this hammer can do like this. Tap. Let me leave the position run. Let me not stress. I can have my 5 million back. They are so greedy that they still want for more. When they then leave their position run, right, they don't know how to read the mechanics of the trade very well. The positions are decreasing. Then you decrease here on the bottom of the hammer, then it increases again. When it increases again, they still have hope. Oh, that's what I told you, right? That's what I told you. Bitcoin will go to the moon now. And then small, they tell him that, at least, man, you have 10 million and you borrow 6 million. This 1 million on your stop loss and this other 5 million that you just lost. Go withdraw your profit. Man, withdraw your profit here. It doesn't withdraw. 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 Withdraw your profit, my boy. Withdraw it. No, it comes here. Withdraw your profit. It doesn't withdraw. And then the market move again up. He said that, you know, I told you. Because all people have ego. You see now, I told you that the market will go to the moon. You see that you just broke above Kijun. So it means that the market will go to the upside. Meanwhile, this one is an inverted Kijun. An inverted Kijun. And then the market go down. Withdraw the money. And he finally comes here close to his stop loss. Then he withdraw the money with a minus 900K franc CFA, right? So inside the 1 million, he lost again 100,000 francs CFA, right? So now jail and people are suing him. Jail. People are suing him. Where is the Jangi money? Where is our money? Jail is suing him. Those people, those are the greedy people who went and invest without mechanics. Those are them, see their mouth. See, all the money for me, all for me. They have overconfidence and exaggerated sense of one's trading ability, leading to taking greater risk than necessary. Because I told you that the risk is the setup risk. The setup risk is the highest risk. So mechanically they're wrong and they have overconfidence because they have bad mechanics. Those people who have bad mechanics, they have overconfidence. Like their confidence out of nothing. They are confident out of nothing most of the time. They are so greed, like an intense and excessive desire for wealth. These are them. What is greed? Greed is an intense and excessive desire for wealth that can cause traders to make irrational decisions and neglect their strategy. The strategy is what the A+ setup trading plan, right? So they have a bad mechanics. They don't know that, and they skip, like, one wheel of your car just get lost in the highway, and you keep accelerating your car at more than 200 kilometers per hour because you have overconfidence. It's like you are driving a car as if the car is your toy, man. Anyway, as if it's a car that a toy that you push with your hand like this. What? Anyway, I don't know what I want to say about those greedy people. Excessive desire of why did you not remove your money when it was at this 20 million? You went again and borrow another one for what? For what? Now people are so you start hiding. You don't get out of the house because they start calling you. You take the SIM card, you remove from the phone because they can locate you. They can locate you. You make 2 months, you don't get out because you don't want they arrest you. Prison is looking for you. It looks good for them. Those greedy people, those are them. They don't know. They have bad mechanics. I do not say that investing 5 million is bad, though, because I tell you again, I'm not in money type of investment. I'm in setup investment. If I call myself like A+ setup investor, this is me. I'm not in investor. A+ setup investor, this is me. I'm not in a type of, how do they call it, percentage investment. It's not about percentage investment. It's about reading the economic mechanics, the digital mechanics, the volume mechanic. Even great investor invest when the market is at the bottom like this. Who do you think invested at this level? Let me show you. This is Bitcoin, right? Who do you think invested at this bottom level? This Bitcoin will rise from here to the top right. Who do you think that invested here and made the market rise to the upside at this point? At this A+ setup, this is a Tencandeng. Who do you think? BlackRock, right? Those big banks. They know they master what? They started investing at this level. They invested again a little bit later. They invested also. Yeah, those big banks, they accumulate. Yeah. So you as a trader, you also need to be an A+ type of trader, not be a mechanically wrong. Those big banks invest where there is money. Hedge fund, they invest on setups. Who do you think are making the market rise like this? Those who have the most amount of money. The ways. So trading addiction, a compulsive need to trade, driven by the thrill of potential profit, often lead to poor decisions and significant losses. A compulsive need to trade, driven by the thrill of potential profit, often lead to poor decision and significant losses. There are people who take 1,000 trades per day. You know why? Because they say that right. They will trade every pair. USD GPY, GBP GPY, AUD. They will trade every pair. Bitcoin, gold, Germany, CAC Nikkei, XP 500, cocoa, corn, silver, crude oil. They will trade everything. They have a list of pair like this. They trade all of them at the same time, and they make 1,000 trades per day as a human man. If you want to replace your job, your employment with another trading type of employment, please better leave trading and go and do granite type of thing. You can actually just have 3 pairs, your 3 best pairs that you trade 1, 2, 3 like this, or 4, maximum 6 pairs. 6 is even enough. At the beginning, just have one, like USD GPY, who is very good, and then you'll be making money out of it. You can actually have only that and make money. Why are you going to make trading such a work? And meanwhile, trading is just a machine for to multiply money, right? Those are trading addict. Trading addict. You should not be trading addict. You should be a mechanically good trader. Over trading is not good. It's not that good. Just put tech. There's not always the great setup. When the great setup appear like this, it's just one time, and then for it to appear in SSA again. It takes a lot of time. So after that, recovery desperation, those people want to recover their money due to driving by greed. They take reckless risk, right? For example, you bought here and you just got out of the position, and then when the candle are at this level, you buy again because you are nervous. You are more nervous than trading. You lose again. You bought 500K and then you 500K 2 times, and then you start losing all your money, often resulting in further financial damage. That's it. All of this bad behavior are due to greedy people, those who have fear, and those emotions are very normal, natural human emotion, but it exists due to mechanics. It doesn't. Those emotions are created by object. Don't tell me that. Don't tell me that you are driving a a a car that miss one wheel, that doesn't have one wheel, in at 200 kilometers in the highway, and you will be confident of yourself driving this type of car. Are you crazy? Confidence cannot exist in this type of mechanics. Man, come on. Even if you are an engineer, you build a building engineer, and you want to build an hotel above this pygmy house. Brother, please, I beg, don't do those type of shit. Those type of mechanics that are broken like this, right? That's what lead to fear and greed. But when you are mechanically good, you know the type of sentence that you tell yourself, I can do it. I have wisdom. I can do it. I have wisdom. I have calm. I'm confident. I have assurance. I'm sure. I'm courageous. I have clarity. All of that is given by mechanic. But wrong mechanics lead people to what? To ego. Ego is the worst, the most unproductive emotion. That's why you lose money, bad decisions, fear of losing too much, hesitation after hesitation. I gave you an hesitation example. Do I enter here? It is another block. No, you have bad mechanism, my boy. Impatience, the desire for quick result now. Quick result now, buy now or regret. Those fear of missing out of Bitcoin around internet. You start falling in there, in those emotion impulse. Buy now, buy my course. I'll show you how to buy Bitcoin. I say, my boy, you don't need any type of emotion to buy this. You need mechanics, because it's mechanics that lead you to bad or good emotions. Mechanics create good or bad emotions. You don't need to have quick result. You just need mechanics. Impatience comes from bad mechanics. Unwise decision is due to bad mechanics. Negligence. Those who have bad mechanics, right, they are great to neglect. They don't know how the right timing, because the right timing is this teaching above SSB. They will start buying recklessly, right? They have negligence. They neglect to do the good structure analysis and put the risk per trade well calculated, which correspond to the objectives. So their goal, they, they enter, is like they wake up in the morning, they buy anywhere. They just close their eyes. They see that, okay, we are above all of the Ishimoku line. Let me buy. Jesus. Like, Lord, please, Lord, save those people from those bad behavior. It takes any lot. You just open MetaTrader 4 and then you put one lot. Why should you, man? Negligence, no good mechanics, high risk on not bad, wrongly calculated risk per trade. There are people like that. Because they are affected by what? Bad mechanics. They are not ready mechanically. So the readiness mechanically is that is what creates those good emotions, right? What creates those good emotions. So how can you be disciplined, right? Can you be a mechanically disciplined trader, right? Books for discipline. You know that what get you disciplined is books. But before talking about books, I need to talk to you about the learning curve. This is the learning curve. When you start as a beginner, debutant means that your beginning, to an expert, a confident trader, right? What happened is that there's a psychologist called Dunning-Kruger effect on learning. he gave this plot how a beginner can become an expert. First of all, at the beginning you don't know nothing about trading. You don't know nothing about trading. But then you start knowing something. You start knowing how trading works. And then at that time, your confidence starts to increase. And then you feel as if you know everything about trading. That's the first wave to the upside. And this is confidence. Oh, this is high confidence. You see that? This is high confidence. But the problem is that it's not the disciplined confidence. It is high confidence, but not the disciplined confidence. What is right in your confidence is just an idiot, stupid type of confidence. Because you think that because you made one win, two win, or three wins that you already mastered the market. You are not prepared for difficult market when maybe the market is ranging. You don't know even the timing. You don't know how to read all of that. And you think you're good. Meanwhile, you are just an idiot. A complete idiot, not even a dummy, a dumbass guy, a dumbass trader. That's when you are still a beginner that has high confidence. And those type of beginner have a lot of confidence. They can argue with you. They can argue with you as if they created trading and all of the candles that are inside there, as if they own it. That is beginner confidence. That is more stupidity and idiocy. Then with feedbacks, analysis, and re-evaluations, you start descending in the street of humility. You go back to the street of humility because the street of humility has a lot of dust. Everybody has dust in his body there. You start. That's why I've opened a group for trading when you are inside a group of traders who trade like you. Where you see analysis, you start putting your mechanics in question, how you trade mechanically, and you reevaluate yourself, right? Then your confidence become low because why do your confidence becomes low? Because feedback and analysis on your personal analysis, not only the group analysis, the personal analysis, make you see that your ego was bullshit. That all of this big ego that you had, right? It was just because you are so stupid. That's when you start removing your clothes of ego and start walking only with a t-shirt and a shirt without slippers on the street of humility. That's the learning curve. After being a beginner, you thought you have the highest confidence and then you can make anything in trading. You become doing at that level you were just a stupid trader. Then feedback from others and your personal analysis make you reevaluate yourself, right? As I went through this curve, I went through this curve. Mostly here, the most difficult part of this curve at this level, when you start getting feedback, when you start analyzing yourself, you start hating the fact that why ego is such in you like this, why revenge is such in you like this, why those bad emotions is such in you like this. Then you come back to humility, the humility part. After that, that's when you start analyzing. While you are analyzing, right, you are losing capital, you are losing trade. You are not forced to burn your account. There are people who never burn their account, who never blew their account. At this level, then, you start seeing that, this is how mechanics work, this is how mechanics work, this is how mechanics work. When you start seeing how mechanics work, that's when discipline and confidence and consistency start coming. Now, when you earn money, you are not shouting, you are not overexcited. You are optimistic but not overexcited. You start then having what? Skill. This is competent. You are competent now. Competencies like skillful. You start becoming skillful, right? And then with your discipline, you have consistent profit. And then you reach the table of profit. This is when the benchmark when you reach. The next time that you become confident, right, is only for high income in trading. You become an expert. That's when you can earn millions of dollars in trading. When you arrive at this level, this is the table where you want to sit. It's stable growing table where your profit just increase. So those who have the ability to do that are only in control of one thing. So those people who are disciplined, right, are in control of one thing. They are in control of what they can control is their mechanic, their discipline, and their percentage per trade. But other things that are not, these are the only things that you can control. You can control the A+ setup, your discipline, and your risk per trade. What is out of your control, you don't care. Economic news, you don't care. You just read the time of the economic news. If it's not in your time, you don't care, right? You don't care what is not in your control. Other traders, like this trader lost money there, this trader lost money, and you don't care. Signals, you don't care. Your broker spread, you don't care. It's out of your control. If the spread is 10 people, that is for the broker. The profit spread, if it is 10 people, that is for them. You only care about your mechanics, your discipline, and your risk per trade. That's what you can control. You cannot control profit. You cannot control the economic news. You are not even the one reading those economic news. You cannot control the other traders, the trader who win, who lost, those senior providers. You cannot control the broker spread. Are you the one putting the spread there? The broker commission. Are you the one telling the broker how much money you will send? Okay. The only thing that you can do for all of that is choose the most regulated, the most trustworthy profit broker or broker. That's the only thing. You only have choice. In the part where you are out of control here, this circle, this great circle where you are out of control of that. What you have there, it is choice. You choose the most trustworthy, the most regulated. That one will not scratch your heart. But stay in control of what you can control. You can control your mechanics, your discipline, your risk per trade. You can decide 1%, 25%, 50% at your will. That's your control. That's what the person who put it is you. The person who pick your setup is you. So, do you know the difference between, that's for the confident trader. Do you know the difference between the confident trader and a broken trader who has bad mechanics? And a broken trader who has bad mechanics. It is this. Why the confident trader is focused on this part, on books, on discipline, about discipline, like this. The confident trader is focused on books about discipline like this. This book, for example, is a discipline book. This book is a discipline book. I advise you to read this book. This is a discipline book. It's not a book about trading, but it's about discipline alone. The daily self-discipline of everyday habits and exercises to build self-discipline and achieve your goal. I place the Amazon link here. Let me come back here. You see this. This is a book. Self-discipline, everyday habit and exercise. So this book gives you exercises, right? Let us read this comment, this top review comment. Melissa, this girl, is saying that clear-cut, honest, life-changing advice. Love how inspiring and informative this book is. It is organized in a clear and concise manner with real-life example and concrete usable application for everyday life. Quick and easy to read, so you can start applying what? See what she said. Applying what? The wisdom to your daily practice right away. It means that for those people who doesn't have emotion, the wisdom, emotion, and the confidence, right away, you need to read this book. Now, if you are the type of person when you wake up in the morning, you are so undisciplined, your bed is scattered. You don't do sport daily, or you don't have you don't exercise daily. You don't do, like, there are things that you neglect, you procrastinate every day. Reading this book will change yourself right away. I read only the first chapter of this book. Only the first chapter. When I read the first chapter, I can tell you that, right, this girl is right. My discipline just increased, like, straight away. Like the same day. So read this discipline book. After that, you have other books like the psychology book. This one is Psychologie des Grands the Grand Trader. This is a French book from from Tammy Kabash. He's a French mentor in trading. If you read trading or you want to translate, you can actually read this. Yeah, it's very great too. And then you have Trading in the Zone. Master the market with confidence, discipline, and what winning attitude. In this book now, right? In this book, this is the Trading in the Zone. This is the book where I read inside. I started this book. I did not finish. I read the beginning of this book just to know what should I need psychologically to succeed. The book said says that, right? If you are not good mechanically, right, forget. First, be good mechanically. Why can you be why can you be a good trader and then you are wrong mechanically? What will you aim like this or inside zone? What will you aim? Nothing, right? That is the difference between the confident trader. He has discipline and good psychology, right? But the bad mechanical trader know where he stands for. He stands for luck. When you start putting trade, right, if he close his eyes like that, he crosses his finger like Tenkan and Kijun, as if by crossing the finger, his money will increase. Lucky, like by luckily, if I have this money, if I have no, boy, it's not about if you have money. It's about go and get mechanical skills, or about mechanical trading skill. Other bad mechanical people rely on prayer. There's a meme on YouTube that that shows two drawings, two animes, right? When they invest in trading, they go and sleep and then they open one eye to see if when during the economic news their trade went up. They pray. There are people who pray, God, if you love me, make this trade that I just took to win. Make this trade go positive. Those are them. Wrong mechanical people. Meanwhile, God is just saying that go and learn mechanics. There are the other people who rely on instinct, like reflexes. Instinct is the intelligence of the subconscious. You don't need any subconscious here. You need consciousness. You need to be conscious of A plus A top trading. Conscious of what? The timing. Kijun going above SSB. Conscious of what? The A plus setup. The mechanics. Those are the mechanics. Those are the mechanics. What are you doing like that? There's nothing like subconscious. The trading is conscious. There's nothing blind here. It's not spirituality. It's not religion. It's only consciousness and practicality. What's wrong? There's no religion in trading where you should pray or where you should rely on some spiritual forces, strength. No, everything is mechanical. You need to rely on what you see. It's science. It's observation science. To come up with an A plus setup plan, I observed this market for days. You have my trading history. So it's science. Blaming order is another one. There are people where after this first stage of luck, right? Luck, prayer, and instinct, when it doesn't work, they go to the next level. They start blaming who? They start blaming others. You are a girl, you are in a training industry, and you told to your elder sister about trading. She didn't like it, and then you start blaming her that the reason why you are losing trade is because you told her trading, and then she has a bad mouth. She's saying that you will lose. She's saying that it's not a good business. She's saying that this is too risky business. She's saying tell you what that make you feel bad about yourself. Meanwhile, rather than accusing your elder sister that all of your trade lost like this, you must be doing what? Being great mechanic. It's about mechanics. It's not about your sister or your brother. Because you told your family member that you trade, they start talking bad about you. You have a bad reputation, and then you start feeling lonely, and then you blame them. Stop blaming them. They are not the one. It's the mechanics the problem. They are not to blame. You are not to blame. It's the mechanics. When those people, those bad mechanical people, stop blaming people, right? The next phase is ego. Because now they learn mechanics a little bit better. See, they start having ego. They start having ego. See this. They look like this in real life. Eh? Small muscle, tomato muscle like this. In real life, skinny like a street dog who did not eat for 1 month. But in their head, they make as if they are Nganu in MMA, UFC MMA. They make they think as if they are Ngannou. They start flexing in their head that I'm strong. Like they start winning like 1 or 2 trade because they read the chart very well. They read the chart very well, and they start thinking that they are Ngannou. They are Ngannou in trading. Man, you are not Ngannou anywhere else. You are not Ngannou. You are just a trader. And then that's how they another day, because they are not ready for a difficult market like this market, they start making wrong decision. They buy here, they get their stop loss because their take profit was around this level. They were expecting that the price to keep going up further. They didn't go in lower time frame to verify the how they call it, the confirmation if the trade will continue or not. Their ego blind them, and then they start losing because they think they think they're shit. Meanwhile, they are not even a fact. So those are the people. Those are the people here. They have so bad mechanic. So you have other people. After that, they come to revenge because ego is so big. They'll start revenging. They bend their mouth like this. These candles, they place their hand like this, as if they are some type of magician because they now know how mechanics start work. But they are not ready for a difficult market. Then. They start they start wanting to revenge. If they lose money on this trade, they buy year out of thin air. I don't know what type of mechanic they even have. They start having, they start the revenge again. They buy again at the bottom here when they see some hammer, and then they come again getting out because they have revenge type of mindset. This is how they behave in front of the screen, as if those candles knows them. They think they shit that as if those candles know them. None of this candle knows nobody. You are just a data, one trader account. You are just one account, one trader account out of this multi-billion-dollar market of trading. Multi-billion-dollar market of trading, daily billion-dollar market of trading. You are nothing. They make as if they shit. They nothing. They nothing at all when they have that ego. Those people who are bad mechanically. They start revenge on trade. Nobody knows you. You nothing. You are just a number out of it. Just so my boy, calm yourself. Pipe down. Pipe down. You nothing. Nobody even sees you. You are just a data with your broken name. So you should be more, rather than having revenge, start building great mechanics to have confidence. And then it's just because they don't know that it's mechanics that increase that type of bad principle. Even though there are people even in real life, they also have that type of behavior naturally. But mechanics also increase all of that because all of us human we have it. For example, me, when I lost my trade, as I told you, profit. A lot of revenge was inside those laws. A lot of revenge. I'm nothing, but our behaving as if I have right. Those are people who say that I'm right, you are wrong. I'm right, and you are wrong. And they say you are wrong to candles. So I were like this. All of us will have it. Then, you know, the final form of a bad mechanical trader, it is excess criticism. They take the mirror like this, they hit a head, bam, and the mirror broken ceiling. The mirror beg them, like, I beg, don't hit me again. See how the mirror is bending himself. Excess criticism, right? They start blaming what? They start blaming themselves that they lost this trade. They are not successful in trading. They are losing because they didn't sleep well. This is one reason. They didn't sleep well. They wake up late. They woke up late. Their t-shirt is dirty. Their t-shirt is déchiré. How do they call this déchiré in English? It's ripped. Their t-shirt is ripped, right? Their t-shirt is ripped. Their slipper are ripped off. Their shirt is ripped off. They look ugly. They have a bad hairstyle, a dusty hairstyle. Their feet has dust. That's how they blame themselves, right? They have, if she is a girl, I trade during my menstrual period. That's why I lost trading. No, it's not about you, man. It's not about you, girl. It's not about you, girl. They start blaming anything about them. They are broken. Their phone screen is black in one side and is giving on another side. That's what they blame. They start blaming. There is no light. They cut light when they wanted to exit the position. They start blaming internet connection. The internet connection were lagging. They start blaming the what about them? They start blaming the bed where they sleep. The bed is not comfortable. I need to change. They start blaming their room. Their room is too small or their room is too big. They start blaming the color of their walls. That's excessive self-criticisms. This trading is not about you. It's about mechanics. Just be good at mechanics. It's about mechanics. Stop taking yourself for as if there are people. There are people I don't know. I really don't know. They start putting themselves. They say it in English, in French, remise en question. Je me remets en question. Je me remets en question. They start questioning themselves that maybe it's me, maybe it's my head, maybe it's my phone, maybe it's my sleep quality, maybe it's the food that I eat junk food. I want to ask you a question. Why is it that in other industry, like, let us say in football, when you don't score a goal, you don't put yourself in questions? Like when you miss one shot, don't score that goal. Why are you not putting yourself in question? When this your bicycle wheel just broken, did you not put yourself in question? Why did you instead when and put the wheel in question? If those bicycle nuts were well fixed, those bicycle nuts here were well fixed, why did you not put yourself in caution? You just made an accident, the wheel just went off of your bicycle, the front wheel. Why did you not put yourself in caution that maybe it's me, maybe my feet is bent, maybe my head is not well placed in my body? Why did you not put your whole self in caution? There are people, why when you are in school, in high school, and then you fail one exam, why are you not putting your whole self in question? They start questioning but when it is trading, start questioning your whole existence in trading, your whole human beings. Why am I even a human? Why am I even experiencing this emotion? Why am I even having fear like this? Why am I even inconsistent? Is trading for me? Is trading worthy? Should I not look for another job? Why are you not looking for another bicycle when your wheel get off like that? Why when you make this your front wheel of your bicycle get off of your bicycle, what you think directly is about changing the front wheel, not about changing your body? Why is it that When it's not trading, you are looking for mechanics fixation. And when it is trading, you are starting thinking spiritually about yourself rather than fixing your mechanics. Why are you thinking like that? Why? I'm asking you why. Why are you thinking so wrongly? It's about mechanics. Why is it that when your front car, your front car get off like that in the highway, why are you not questioning yourself? Maybe I'm not a good human for this car. Maybe I should stop driving cars. No. What are you doing? You are looking for a how they call it? Au garage. Tu peux au garage pour changer là. You go in a garage, in a garage. Is it garage? Garage. You go, in a garage to change the front wheel, right? Why are you changing the mechanics of your car rather than changing yourself when this happened? Right? That's the question I'm asking. If it's not about mechanics, because people start using love, prayer, instant calling God, blaming their village people, blaming their sister, having relationship problem with other because they blame them, they judge them, they accuse them from their failure. They say that they did witchcraft in them. That's why they cannot be successful. They say that they are damned in their village, as if it is other people or somebody. It's just about mechanics. The reason why you fail is mechanics. It's nothing about you or other people. Why is it that on other industry, like when you eat bad food, what are you changing? Is it you or the food, the next food that you eat? So stop being like some thinking wrongly. It's about mechanics. Just be mechanically great and just be disciplined to take your mechanics. And you know what? When you have a great mechanics, you will be a good in mechanics, right? The greatest of all time with mechanics because you are disciplined and confident. We know who you will become. You will become these two people, Akashi and Aomin. These two manga animes, right? Those who saw Kurukono basket. You know that in trading, the basketball is the candles, right? And this is the trader. Takashi and Aomin are the two players that have the most amount of confidence and wisdom in the basketball court. I want you to be like that. So trading in the zone, by reading this book, you increase your level till you have this type of eyes. When you see the market, you see what the right timing and the setup. You will have this type of eyes in the zone. That's what I wish for you. Become Aomin and Akashi. With that said, have a good trading journey with S Plus Setup.